Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, September 1st. It is 6:45 a.m. as I'm starting the video. And as always, please run your player at 1.5x. A lot of red on the board this morning. Taking a quick look at futures. Bitcoin down about 1.5%. Nat gas down 1%. Oil down 2.5%. I got equities down about 1%. Little variability there. Copper down about 2%. So down across the board on futures. On the macro front, we've got jobless claims, productivity. We've got some PMI and ISM numbers coming out. We've also got construction spending. Also, China announced more COVID lockdowns. They've got a city there. They found 700 cases of COVID and locked down 21 million people. I think it's Chengdu is the city. Of course, big manufacturing region. Volvo has a plant there. They're shutting down. Foxconn has exposure there. So possibly more supply chain issues depending on which companies are affected there. Also, news out overnight that the U.S. is putting restrictions on semiconductor sales to China. NVIDIA is out with some guidance saying that's going to be about a $400 million hit to revenue on that. I don't know what other companies are affected, but I'm sure that's going to be a drag on the semiconductor complex today and then the days going forward. Over on the earnings front, a lot of minor names this morning. More importantly, this afternoon, Broadcom, Lululemon, PagerDuty were the ones that stood out to me. I think Broadcom and Lululemon are going to be important. Lulu because, more of a high-end discretionary retail name, and if consumers are getting squeezed with inflation, even if they are more of the maybe upper middle class, you may see some pullback in Lulu sales as people kind of rein in their discretionary spending due to inflation, economic conditions, etc. So that'll be an interesting one to see. As we dive into the charts, U.S. dollar still hovering here at the highs as interest rates continue to rise. Even though we haven't broken out, it certainly hasn't shown any signs of backing off. And it wouldn't take a lot of imagination to view this as a little bull flag right here, just below resistance, with this being the flagpole. And here's your bull flag. Get a breakout there. Just on a measured move basis, that's 4 points. So maybe call it 108 to 113. That would be a big move in the dollar if that were to play out. We haven't gone over this chart a lot, but it's really important. The 2-year bond yield continues to drive higher, tagging 3.46% yesterday. And I didn't independently verify this, but I heard somewhere that was the highest since 2007, and that's notable. This is, and you can see even what may be even more important is you've got a bullish ascending triangle against this resistance level. You can see we had a tag here back in June, probably lining up with the June lows at 3.45%, and now we've got baby breakout at 3.46. So if this thing goes on a run, that's going to be pretty bearish for markets in general. But I would expect tech to take a lot of the brunt of that move. VIX really didn't do much yesterday. Of course, that'll be up this morning on the down move and overnight futures. I would continue to watch this 29.30 on the upside for a potential breakout. Bitcoin was down about 1.5%. Trying to hold on to this 20,000 area. I think we're a little bit below now as I am speaking. I think this is going to come down to test that 19,000 again. WTI down 2.5% pre-market. So that's going to push this down towards these lows at 85, 86 type area. And if you were to get a break there, you can see that there's a gap in the charts. Could see prices quickly fall down into the high 70s rather quickly. And I was doing some poking around and discovered that if you look at Brent and WTI futures, the open interest is at 7-year lows, which I found quite interesting. And I don't really have an explanation for it other than, the volatility has scared off a lot of traders. And I mean, obviously there's a war going on between the fundamental factors of a tight physical market combined with recession fears. And those are at odds with one another. If you got a tight market, that tends to be bullish. But if recession fears override that, people are going to be figuring on demand destruction. And also we've got that conspiracy theory out there that the U.S. government is intervening in oil futures to drive down the price ahead of the elections, to keep gas prices low during the next, couple of months or whatever. I have no way to know if that's true or not. I wouldn't doubt it, but we'll just have to see. You gotta trade what's there. But anyhow, this has been a swift, $10 move in just a couple of days. That's not normal. Also, we've got the Iran nuclear deal supposedly on the verge of being signed. So supposedly that brings more oil onto the market as well. So a lot of big forces at play in the oil market. NYMO down at minus 91, which is as oversold as we've seen it, more oversold than the June low, obviously these April and May lows, and we're down here into the December and January lows. So what I'm winding up for is, you can see from the chart that the NYMO stands undefeated, and every time you think you got a leg up on it, it comes back with a vengeance. So I would be very cautious of getting way out there on your short side exposure. If you're nimble and you can grab, 1-2% moves during the day, those are gravy train trades that you can grab. And if you, like I say, if you're nimble enough or good enough to do that, by all means do that. All I'm saying is we're due for a snapback. Could we go to 140? Yeah. I mean, here's your COVID lows down at minus 140. But this right here is, you can see the limit going back years. We are right there. So be cautious on your duration type shorts. And you can see it here on the NASDAQ as well. Not to such an extent. We're at minus 70. We've had quite a number of readings in the minus 80, minus 90 area. We may tag that today on this down move. So there again, I would say be really cautious on, getting all bearish at this point, because the move is most likely going to be winding up here shortly. Now, how big the bounce may be, I have no idea. We're going to have to look at the charts to kind of get a reading on where would be some likely places for a reversal. Now, as we drive into the charts, we had a down day yesterday. You can see on SPY, I think the big level to watch is 390. Why? We had a big line. Well, we had support back here. We've got a high volume over price bar. We've got a lot of resistance. We broke out of that 390, then came back for a back test of it, further validating the importance of that level. So as we watch for levels today and possibly into tomorrow, I think if you got into 390, filled this gap, got into 390, I think that would at least be a great place to potentially see a bounce. And you can see it here real clearly. We're going to open down below, and we've got a sizable gap here. Now we're going to open in this gap. So that's going to be really, really tricky. Why? Because you'll probably have a gap above and a gap below that's yet to fill. So, and then you've got that 390 big level right here as support. So, use caution on that opening little sequence. If they decide to go up and fill the open gap above first, and then possibly go down to fill the bottom of this gap, give a tag to 390 and bounce, or just gap down and go and, sell for an hour or two, fill this gap, come down to 390, and then a potential bounce point. And, if you get the sense, say you were short overnight and you get the down move and you want to stay short, you can always take some off the table by simply rolling down and booking some of those profits, and then, staying short and hoping for a continuation move. Very much like SPY, we've got that big level on the Qs, which is right here at 295. You can see resistance, 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 breakout into resistance, then a back test, further validating that 295 level, and then we were off to the races. And now coming back for another touch of that level. Now, I think this level is going to be important for a couple of reasons. You know, here we had a breakout, right? We broke out and then we came back to back test that breakout and it failed. So that makes this look like a bull trap. But now we have another level exactly the same way. So for instance, we broke out here, we back tested, that's fine. We got the move, and now we're back to back test that level. And if 295 were to fail, then you've got this whole area here as a fake move, right? Because you come back into this trading range, and I think after, or if and when 295 fails, then that opens a door for a retest of the June lows down towards 270, in my opinion. Now, you know, there's intermediate levels where you could get bounces. It's not just going to come down here in a straight line. But all I'm saying is under 295, the likelihood of a move down to 270, in my opinion, is greatly increased. You can see here on the 1 hour chart, we've got a big gap here that goes down to 294.37. Yeah, I don't have that drawn quite correctly. The levels are right, but you can see here the gap started below. So it's, you know, 294.37. You know, that would be an area where, you know, we could go down for a gap fill and then basically reclaim 295 quickly. And then that would be a buy signal. If you undercut 295 and then quickly reclaim it, that's your signal to flip over to the bullish side. IWM, you know, we're going to open below. We got this 183 as being important, but here again, we've got the same type level set up. You know, we've got a line of resistance here. We've got a line of resistance here. We broke out, back tested it, and then moved higher. So really the line in the sand for IWM is 178. If that were to break, then the same scenario would set up for a potential move down to the June lows, having made all this be a false breakout, bull trap, however you want to look at it. And we've already had several, right? We had the breakout here, which proved to be fake. We had a breakout from down here that we're now below, and we're below all the moving averages. So, you know, IWM has to get it together here pretty quickly. And then here on the 60-minute chart, you see that we've got some high volume bars coming in at 181, and then you've got that 178 down here. So there'll be a potential for a bounce here at 181. I don't know where we're going to be at when we open, of course, but that would be a level. You know, if we came down to 180 and then reclaimed 181, then that's your buy signal for a potential move to 184. Just remember, you know, the technical tenets. You lose a level from above, that's a sell signal. You recapture a level from below, that's a buy signal. So you can use these levels as your waypoints along the path. You can see here, lost a level from above, opened the door to the next level down, little Fibonacci rally, lost the level from above, went right down to the next level, and now we're below this 184, and that'll open the door to 181. So that's a good example of how that works. Meta had the big monster gap up yesterday on the news that Snap was laying off 20% of its people. Notice it came right into this downtrend line and was rejected, and they spent the rest of the day fading that move. But there still is a big gap remaining, and you've got the levels right there, 162 down to 157. And the ultimate support is going to be at 155, where you've got all these prior lows. If that were to break, then you've got a $17 measured move to the downside once that breaks. Why? Because that's the width of the trading range from 155 to 172. Apple had the strong opening move, hit a downtrend line, and then came back to fill this gap. Now we've got support levels at 154.5 and then 151. So we'll just have to see where it opens and where it can stabilize. But I think the levels are fairly clear on the chart. Interesting day for Tesla yesterday. Actually just down 0.75%. Opened down here around 272. Had a rally up to 280, which was support or resistance, support, now resistance. So we came up, got rejected, and it stayed within the range. Keep in mind that this double top structure has been triggered on the break of 280, and a break of 270-250 would likely send it on its way lower. We've got a first support here at 267.50, but then it kind of falls away quickly down to a gap and then an even bigger gap. So the measured move target for this move is down towards 255. I mean, if it got down in there, I think it would go ahead and probably just go ahead and fill that gap. Microsoft, you see the rally got stopped here at the prior highs and then kind of fell away. I would have this gap certainly marked. That's a big one. That's a $7 gap. Keep in mind also, we have not tagged that gap yet, and we've also got an uptrend line coming in. So at that 258, 259 level, that would be a prime place for at least a minimal bounce. And then if you get that little bounce and then it rolls over and enters, then I think you got a solid short from 259 down to 252 with some intermediate support levels in between at this high volume bar going down to 256. Amazon was interesting. Based here at 127, got a rally into 129.5, 130. No coincidences. This was support, which made it resistance over here. I penciled in this downtrend line after the fact, but you can see that it's following this pretty well. If you got any kind of a rally into that trend line, and then 127 broke again, I got 125 as being first support, and then a gap fill. I think this is going to fill. I mean, that would be a big move today, $5, but we've seen it before. Here was an $8 move. That was, I believe that was on Fed Day on Friday, but it can happen. So I think this gap will eventually fill. And I think this gap on Google will eventually fill. Remember, we had the big breakdown from 118.5. We said that if that broke, your target is the bottom of the box, which is a gap fill down to 105. So that'll be a big level when and if it got there. These were the prior lows down at 105. So if it were to break 105, your measured move would be $13, right? From 105 to 118 and a half, $13. From 105 puts you down at 92, and then that would certainly get a lot of people's attention. Netflix had a moonshot out of the gate, but ran into downtrend resistance, which they faded back down to 222 and a half. I have not marked it in here, but there is a little gap down to like 220 and a half. So you're probably not going to be able to, it's going to open down, but I think whenever you lose a prior low at 220, then that's going to open the door for a move down towards 212.50, 213 in that area there. Semiconductors will be down with NVIDIA with that news overnight about the export restrictions. We had talked about not getting a complete fill on, what would that have been? Tuesday, had a little rally, they faded it, and then they came back in to fill the gap. Now I looked pre-market and we were down in this 210 area. So there again, we'll have a gap above, and then you're going to have some support below at around 208.50. Let's look at the daily chart on semis. Yeah. Notice that we had a big line here at, let's call it 217, 218, right in there. Support, resistance, breakout, and now we're trading back below the breakout, signaling that this was all fake, false breakout. You also see a double top here, just penciling that in, the distance from here to here. Let's just call that $20. $20 from 227 puts it, where does that put it? Puts it down in the 207 range. So that lines up pretty well with this 204 support. So until price can get back above this 217.50, it's vulnerable for a move down to this support level at around 204, where you see there was a lot of prior support back in June and July. So that's certainly one to watch. ARK did pretty well yesterday, all things considered. Here's ARKF. We're on the daily chart now. Here's the midpoint of this trading range. We had the false breakout, and now we're back in the old trading range. The default target, of course, is the bottom of the range down here at, what would that be? 215, or excuse me, 15, something like that. And you've got an intermediate level here at about 17 to watch. Same kind of idea on ARKG. You've got a midpoint here at 34. I think any break of 34 brings you down towards 31. On flagship fund, we're back in the old trading range. You can see the top of the range here at 45.5. We broke that the other day. Now we're down towards the midpoint at 41. I think you lose 41, then you come right down into 36 at the bottom of the box. And then wrapping up with ARKW, we had the fake breakout, move back into the prior trading range, and now trying to cling to the midpoint here at 52.50. But honestly, that's not going to hold. It's going to go down to retag at 46 at the bottom of the prior trading range. And then, of course, down the road at these prior lows, and this is for any stock that you're trading, but on the ARK names specifically, because we're getting close to those June lows, if you were to break this trading range at 46, you have a more or less, let's just call it a $12 trading range. You lose 46. You take 12 off of that. That will give you the measured move target. And if rates keep going up, like I said before, I am not optimistic about the prospects of these, high valuation, low profit names. From last night, MongoDB, MDB is the ticker, MongoDB, software name. It's down 17% this morning. High flying software name. C3 AI, ticker AI, is down 14% this morning after earnings last night. I think those are some of the kind of moves you're gonna see, as these interest rates go up and these low profitability, high growth names are just going to have a tough time. And don't forget, in a lot of these, semiconductor and tech names, they have not ratcheted down their profit expectations, for the back half of the year. And if we start seeing, that happen, that's when you're going to get those, 10% moves in a heartbeat. Unfortunately, a lot of that stuff happens after hours, and you're either in it or you're not. But watch the rate market. Watch that 2-year like a hawk. Watch the US dollar. As those go higher, it's going to clamp down on liquidity, going to make it tough. And we already know that September and October are not known to be very good months for the market. Now, that doesn't mean straight down. There's going to be rips and dips along the way. But I think since the Fed has spoken, and we still got a solid 2 weeks before, I think the Fed meetings like towards the end of September. So we got 2 or 3 weeks before they meet, and they've already told us, 50 or 75 bips more of tightening. And don't forget the balance sheet reduction. Qualitative tightening is ramping up to $95 billion a month. So those are a lot of headwinds. We'll have to see, how it all shakes out. But the equity markets certainly have their work in front of them. Let's wrap it up there. If you're new to the channel, thanks for spending some time. Hit the subscribe button and the alarm bell if having a game plan and some technical levels to trade against during the day would be helpful. Be great to have you along. If you want to go for the full enchilada, find the link in the show notes where you can add your name to our email distribution list. That way you'll get all our content right in your email box. You won't have to hunt for it. It'd be great to have you join the team. And if you do that, you'll also get a link to our trading room where you'll find lots of motivated, aspiring traders all working together, finding setups for each other, lifting each other up on rough days, and celebrating together on good days. Nice group of traders in there, and we'd certainly like to have you join us. So let's wrap it up there. Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.